Well, a new week begins on the Australian markets. To find out what's going to happen, I'm joined by Adam Carr from Business Spectator. Adam, what's the prospect for markets this week?
Well, look, I think we'll start off in a fairly sort of poor condition because on Friday night, US and European markets were both hit quite badly, actually, on a combination of sentiment deteriorating in Europe. Obviously, there's the Ukraine crisis, and in the US, it was I don't know, a little bit of an overreaction, I think, in my view, to what were not such, they weren't bad earnings reports, but there are a few disappointing elements to them. So yeah, I think we'll start off badly. Where we end for the week, I think will depend on a couple of things. The FOMC meeting, we're obviously expecting another taper of about 10 billion. And then US data flow generally. So we've got payrolls on Friday. Obviously that occurs after our market has closed and we're out for the weekend. But markets will be focusing very strongly on that payrolls result.
Now, one of the things that's been dominating the headlines now for the last week or so is the idea that we're going to go into this huge budget hole.
Yep.
How do markets generally react to that kind of constant negative content in their paper and newspapers and on the radio, etc.?
Look, to be honest, I think markets are tuning out because, we hear this every year. I'm taking my political hat off in saying this. I'm not making a political statement, but we hear this every single year. It happened under Wayne Swan. They say things are terrible. There's this emergency. We're going to cut. We're going to do this. We're going to do that. And they don't. So I think markets are looking, they're a little bit skeptical. They're saying, okay, look, we've heard of this all before. Let's just, let's see what comes out on the day.
Now, go back to your days as an analyst. I mean, you wouldn't sit there and say, oh my God, my spreadsheet's ruined. I've got to cut my forecast for revenue because the government's going to be cutting back and that's going to feed through to consumer confidence, etc.
No, not really. Look, revenue growth is quite solid. There's no issues there. Expenses could be cut a little bit. But yeah, you're right. We don't, economists wouldn't sit there and say, oh, the economy is going to be trash. I mean, some did, and they were, got a lot of egg on their face when they were talking about this massive fiscal contraction that we were supposedly having, and we didn't. But, it's not going to be I don't think, a big draconian, fearful event. Yeah.
Now, speaking of economies and how they're performing, one of the things out of the States over the weekend was a couple of bits of data around services index and also consumer confidence. And it looks like that general conditions in terms of services and manufacturing aren't looking as promising as people had hoped, but the consumer confidence continues to move ahead.
Yeah, look, consumer confidence is pushing a little bit high, and this is what ultimately matters. We get so many manufacturing surveys out of the US. The one to watch is the ISM survey this week. A lot of the others are very volatile. They bounce around. So for the data on Friday, I think that lift in consumer confidence is probably the most important piece of info. And the markets didn't really even, acknowledge it. Happier US consumers are about 70-something% of the US economy. I thought that would be a good thing. But yeah, no, it was very much ignored. I think the sentiment turned for the worse on Friday, and happier consumers made no difference.
Well, it may be that people in the US think that stocks are perfectly priced, as they say, and waiting for bad news rather than good.
Yeah, well, absolutely. Look, there are a lot of views out there which suggest that US equities, or even Australian equity, global equities, are stretched or at fair value, etc. So there's no real reason to sort of run in and buy up. And I think we are seeing that. Payrolls this week, or we need a catalyst, basically. It could be payrolls or stronger than expected payrolls, or some data flow which suggests or gives reason for some renewed momentum.
Adam Carr, thank you very much.
Pleasure. Thank you.